All right, all right. What's up, guys? Matt here, Flex Trades. I hope everybody had a great Monday start to the week, and it was a crazy one. This is kind of what I've been talking about. This is what I've been telling you guys for the last week or so, that I'm patient for, that there's going to be some sick opportunity, and I've just been pounding the table on patience and not burning myself out. And I hope that I sincerely hope that I'm not kind of, I never want to be annoying when I talk about that, but for me it's just so important to scale back and to become way more selective and narrow my focus down. And obviously, it's my duty here with the freedom traders community to let you guys know that I've scaled back size, and I'm very much waiting for the type of trade that we saw today. And I kind of walked through my thought process a little bit this morning and kind of showed you guys, okay, we cracked through that 430 level. I think there's range down toward 420. What do you know? That ended up pretty much being the dead bottom. Scaled in on the way down. And I'll talk about the trade in a second, but yeah, I was red for a little bit and I had risk in mind. And once it found its footing a little bit, and then once it started putting in some higher lows, higher highs intraday, okay, that's when I, size up a little bit more. But overall, I didn't get the overall size into the trade that I guess wanted to. But you're never going to get the perfect trade. You're never going to get the perfect size on, especially on a bounce trade, when you're respecting your risk and things like that. But overall, I think today finally felt like one of those kind of capitulation days where we wash everybody out, and there's a little subtle, panic in the streets, and then we get a nice rally and bounce, and really, this is it. This is what I've been patient for. This is what I've been talking about. I broke down Nvidia last week. I said 230, good buy for me. 220, great buy, and then 210 is kind of mouth watering. And I didn't even end up trading that in my main account. I had a little bit in one of my side accounts, but that ended up, I was so focused, I was so narrowed with my focus on SPY that nothing else even mattered. So I actually only ended up trading SPY today. And that's all right. That's the market. That's this type of environment. That's what I tell you guys that I do. So I've said a lot of words to start here, but really I'm going to get back to the take home point, which is my emphasis on being patient and waiting for this opportunity. These are, once a year type of opportunities, once every 6 months, once every 12 months, if you're lucky, type of opportunity where you get a big time washout, big time pullback, and you start feeling some panic, and then you get a nice bounce. These trades are awesome. They feel good to nail, but you can't trade these if you burn yourself out. And it's just that simple. And I talk about it all the time. I tell you guys that all the time. It probably gets annoying how much I tell you guys, don't burn yourself out. Don't burn yourself out. Don't pre-exhaust yourself. It's just such an important part of my trading philosophy, because I've done it so many times over the years where I overtrade and I start guessing and sizing up too much. And, I hit my risk one too many times, and then the bounce comes and I don't make any money. And it's sickening when that happens. So I hope that me pounding that message home helped save you guys either some money or helped make you guys some money today. I know there's a lot of great commentary in the chat room today. So, well, good job and well done to anybody that nailed that bounce trade today. I'm going to get into the setups now. I'm going to start like I always do with broad market. And for the first time in a long time, we've got a lot to talk about in the broad market. I've got SPY here. I've got QQQ Broad Tech here. I'll go ahead and just kind of draw out some of those levels. So here, obviously, we found support down here at 420 today. Next support, we're going to have to pull it back, which I'll do in a second. But you saw how I kind of anticipated that range today. We were down at around 430, and I thought to myself, well, okay, we had this multi-week digestion back here in September, October. If we slice through those lows, I don't see why we can't pull back to these highs from back here, right around 420, which was the previous all-time high breakout spot. And we did just that, and it ended up bouncing right off that. Um, Another thing that was really noteworthy today, which I didn't really even take note of until just now when I was logging on and I was getting ready to do these charts for you guys. But the volume bar today is actually the most volume that we've had since the March 2020 lows. Whoops, I hate when it does that. So you see, if I could go back, I guess it's not going to let me. Let me refresh that. Look at this volume bar. You go back 2 years, you don't have a higher volume bar than what we had today. You have to go all the way back, right? Look at that. You have to go back to the pandemic lows when we had volume like that today. So yeah, the volume looks better because we closed at the high of the day, hammer close. But like I said to you guys about a week or so ago, this might be different this time. And I'm the first one to, over the last 2 years, pretty much any time we've entered a market chop, here, whether it was here, right? I was kind of the voice of reason when a lot of people were screaming, tops in, we're pulling back, markets resetting, blah, 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 blah. I felt like I was always kind of the voice of reason and reminded people of the big picture macro trend that we've had since the pandemic lows. Well, it's safe to say that broad big picture trend is kind of shattered a bit. And that's not to say it can't recover itself and reconstruct itself over the coming weeks and months. This could make itself back up and get up to 470, 480 by the end of February if it wanted to. However, it does feel different this time. I mean, you see things like Netflix, which just, like a balloon popping. There's a lot of that sentiment right now where there's just a lot of hot air that's leaving a lot of these big, large cap and even mid cap, especially mid cap and small cap stocks. So it just kind of feels different this time, right? So, like I noted last week, that 200-day moving average breach, that test and breach was significant. We haven't done that since back here in what would that have been? Late February, early March of 2020. And then, of course, we had a huge washout, pandemic lows. And then, Fed stepped in, market rallied and sustained itself for this 2-year long bull run, almost 2-year long hyper bull run, really. And now kind of the same deal, right? We had a top, pullback, breached the 200-day moving average, big volume recover. But I'm just, my gut says that we're in for a little more prolonged period of choppiness. So with all that being said, you're probably wondering, where do we go from here? What's my thought process going forward? I always expect the unexpected, right? I never underestimate how much it can bounce when it gets these lows and it finds when there's clear selling for a few days, right? I mean, the last week, every day had a little rally, boom, sold off. Rally next day, boom, sold off. Rally, boom, sold off. You saw it 4 or 5 days in a row. Incredible weakness. Hindsight, yeah, I probably should have just been adding puts into those pops, and I didn't because I'm more of a long bias trader. But that's a different discussion. I'm sure there's a lot of people that were shorting and were buying puts and banked off this pullback. It was a very distinctive bearish pattern taking place. I kind of feel like a dummy for not taking advantage of it, but that's all right. Because like I was saying, the trade that I have been looking for is a bounce trade. So that's all good. Not worried about that. Anyways, like I was saying, SPY never really ceases to amaze me how much it can bounce back. First level that comes to mind when I'm looking at the chart is up here around 450, right above 450, right? If it gets down to retest this low right in this area. So, and that also lines up with this spot here. This high back here in August. So over the next few days, If we do get a little more follow through up toward 450, I would think that that's probably a comfortable spot to perhaps start scaling in for a put position, and we'll play it by ear, right? I just said a minute ago that I missed the bear trade and the pullback trade, and so now the next thing I'm kind of eyeing is if this does if it attempts a bounce, it's going to be a lot to reconstruct itself. But if it bounces back up toward 450, 455, there's going to be a lot of pressure up there, in my opinion. There's going to be a lot of supply up in that area. So we'll see. I'm playing it by ear. Really, for me, the main trade is kind of over with. At this point, I'm just going to watch how this 420 level reacts in the near term. But really, I'm expecting a lot of chop. So, something like this, perhaps a few days of chop, and then maybe a leg up, retest that 450 spot, or perhaps a leg down from there. So let's see. I want to see us condense here after today's candle, today's volume. I want to see a few days of inside days from the last two candles. Let's see, play it by ear. Same thing with QQQ, right? There's going to be a lot of pressure up here around 365, 370. There's going to be a lot of supply, a lot of overhead. Unfortunately, that's what last week did. Last week was a lot of selling pressure and a lot of overhead. And you can see it just in the candles itself. If you zoom in on these candles, you have that upper wick, you have that long upper wick, you have another upper wick, and just boom sell, boom sell, boom sell. And then today, big sell, rebounded, which is nice. Take it day by day. But, obviously my immediate bias at this point is if we get up toward 450, let alone 455, kind of flip it around and inverse the chart at that point. Right? So here's the inverse of SPY at this point, right? So at that point, it would be kind of like a pullback trade, right? If we could pull back to 450 or 455, right? I would think that that's kind of a good spot to scale back in. It's a clear reversal chart, in my opinion, given the volume and the breach of the 200-day moving average. That's where my head's at this point. But I'm not going to get super ahead of myself. I'm just kind of laying the idea out there so you guys know. It's been 2 years where I've defended the broad market, where I've been the voice of reason saying, everything's going to be fine. Big picture, big picture, big picture. I'm kind of shifting my sentiment a little bit. Actually, I'm shifting my sentiment a lot. It's different this time. It feels different. The chart's different. The chart data is different. The volume's different. Everything's different about this pullback. So you just need to keep that in the back of your mind. Just look at, I'm just going to flip through a few stocks that come to mind. I had DKNG, DraftKings, one stock that comes to mind, a full round trip, right? Huge bull run and almost a full round trip. Another one that comes to mind is AFRM. Huge bull run up from $50 up to $175, back down to $50. Complete round trip. Fubo, complete round trip from $10 to $60, back down to $10. I can go on and on and on and on. GameStop, right? It's almost back down to, it got back down to the 80 spot today. AMC got back to that retest of that breakout spot from last spring, right? We went from $15 to $75. We digested for, almost half a year, over half a year, 8 months, and just bled back out, right? The list goes on and on and on. And then you go to something like Netflix, which just kind of, this is something else. Seeing a daily RSI at 10 on a large cap stock, one of the largest market caps in the entire global markets, with a 10 RSI, it's mind boggling. So things feel different. You can't forget that. You have to take note of that. You have to remember things feel different. That being said, there is one setup that I'm still bullish on, that I still find very constructive. And it's even more impressive given the volatility and the range of everything over the last few days. I mean, there's been so much range, up and down, intraday, huge range. And then there's gold, which is just really kind of contracted in on itself even more over the last couple days. So with gold, I mean, we're talking about a 2-year long supply and demand contraction, which is now at this inflection point, almost at this inflection point at 175. So here's that 175, this 175 level, which is a big time inflection point if we get to there. But you see, we've just been contracting in on on itself for 2 years now. So, yes, this can continue to contract over the next couple weeks. It easily could do this for the next couple weeks. But that, 173 spot, and especially that 175 spot, big time spots, big time levels to keep track of. I'm building a swing position. My risk is right around the 250 simple moving averages, which is right around 169. My core position's in the money, intrinsic value. Don't worry about the strike date. Don't worry about any of that. Just know that I'm in the money and I'm intrinsic value. People ask me that all the time. I say the same thing all the time. Don't worry about that stuff. Just know my position is in the money, intrinsic value, and I'm looking to add on washouts down toward my risk, which is around 169. And I will likely add into the 173 break, and I would likely add into the 175 break for a trade up toward 177, 178, something like that. I love the setup though. You can't let this one get off radar, in my opinion. I haven't looked at the minors, but I'm sure they look, not as good. I don't really focus on the minors. GLD looks good to me. That's what I'm focused on. AMD, I'm kind of switching it up. I was talking about NVIDIA last week. I'm going to switch it up to AMD today, just because I like the level that AMD bounced off of more. This was a big time breakout spot back at 108, 109 back in October, and it pretty much retested that on the money today with a big bounce. So again, kind of what I was talking about with SPY, I want to see if this can digest for a few days. And if it does digest for a few days, I just want to see, does it break to the downside, and do we have more downside momentum, or does it digest a few days and then does it climb back up and get a little upside momentum? If it does get upside momentum, I don't see why this can't get back up toward 120 or so. But I want a few red days. I want a couple more red days, a couple more inside days, a little more chart data before I make that kind of trade. Amazon I had up just to show. There's no trade thesis here. It's just, it's incredible. Just the velocity behind the pullback, the volume behind these moves. And for those who are new to this formation, because there hasn't been a whole lot of this, anybody who's been trading for only one or 2 years, you haven't seen this very often. And this is the death cross. This is what's called the death cross. This is when the 50-day simple moving average crosses below the 200-day moving average. And it's typically a signal, or as the textbook says, it's a signal for a bearish outlook, bearish, short term, medium term. And I don't really play by the textbook too often, but the bear signal, the death cross bear signal it's something to pay attention to. I'll say that much. I do very much pay attention to that kind of signal, and the sentiment shift that it does have. You see, last time we had it, and it is a lagging indicator. Obviously, we didn't get that signal until after we put in the bottom back in March of 2020. But it's clear, it's very clearly a short to medium term length bear signal. So just keep that in mind. Amazon's got it. A lot of setups are still far from it, which is I guess you could say it's good news, but I don't think there's much good news as far as these setups are concerned. So really, take home point, take home game plan, if you will, is how do I get rid of this? Stop sharing. There we go. All right. Take home message with the game plan Yeah, there could be a little more follow through with SPY, QQQ, some of these individual names, but I'm really just staying patient at this point. The main trade has been made. I've been pounding the table on that trade about how patient I'm going to be for it. I ended up making some, a couple decent trades on it today, so I'm happy overall with the execution of it. But I think the bulk of the trade is over with. There might be a little more follow through, but I'm just patient again at this point for some digestion. I want to see a little more pullback, digestion, and then, play it from there. Does it break to the upside off that digestion? Does it break to the downside off that digestion? I told you guys what my tentative bias is. And then of course gold. Just too good of a setup to pass. So yeah, just continue to stay disciplined. Don't oversize. If you've been crushing it over the last couple weeks, if you've been crushing it over the last week too, I mean, imagine you made money for the last week straight on in this type of environment. That's fantastic. That's amazing. The last thing you want to do is start making dumb decisions and giving that money back. I've been there. I've done that. It's not a good feeling. So if you've been crushing it, if you've been making money, awesome. Make sure you keep that money now. Stay patient. Don't start, doubling your size or tripling your size and chasing home runs when home runs aren't there. Today was an A+ type of opportunity, or it's going to be a little while until we get another A+ opportunity. So just keep that in mind, guys. All right. That's all. Peace.